Well, it's a very important development in the region because so far Cyprus is the last country in Europe that is still burning diesel for its power generation. Cyprus is a country that has discovered gas a long time ago but has not been able to develop its gas resources yet. So for the security of supply of the country, for the reduction of emissions and for the consumer, this is a very important development. We're looking to bring gas from our floating production vessel, our FPSO offshore Israel, the direct pipeline to Cyprus, a deal that could be in the range of 400 million in terms of capex. It's a relatively small amount with a very big impact for Cyprus. We will be supplying gas to a power station that is starting up in March of 2026. Obviously, the pipeline will need to be approved by both the Israeli government and the Cypriot government, but it's a pipeline that can provide gas to a country that is still burning diesel today. So for Energean, this is not a major capital investment, but it has a big impact in the East Mediterranean. You know, it's interesting, we're at ADIPEC, and a few years ago, if you would go to any conference, the only topic of discussion would have been ESG and reduction of emissions and climate change. Today, there is a completely different narrative, and it is security of supply, power is knowledge, and the new demands that the world has to fuel the big AI revolution that we're experiencing. So carbon capture continues and will continue, in our view, to play a major role in our investment plan and the investment plan of Europe. In Greece, we have a project which is going to be the first project in the Mediterranean to store carbon in a depleted oil field, a project that has been funded by the European Union, a project that is very well supported by the Greek government and plays a major role in the reduction of emissions of the country. 3 million tons per year will be stored in this project, and this represents 30 to 40% of the industrial emissions of the country. So Greece is continuing, and Europe is continuing the support of carbon capture. Energean is in the forefront of this. So we have to do both. We are part of the Oil and Gas Decarbonization Charter that Dr. Sultan had initiated in the COP here in Abu Dhabi. And one of the priorities of OGDC is for the oil and gas industry to play a role in decarbonizing heavy industries. And this is exactly what we're doing. We are helping cement factories, refineries decarbonize. We are helping Greece, the people of Greece, live in a better environment, and the industries of Greece and Europe to remain competitive. Because one of the big challenges that we face in Europe is that if we are the only continent that prices carbon, then our industries will become uncompetitive and we will become just a tourist destination for the rest of the world. So the oil and gas industry, Energean, have a major role to play in decarbonizing industries. So carbon capture will continue to be, in parallel with our oil and gas operations, a major part of our investment thesis. Unfortunately for all of us, God didn't put oil in Switzerland. So oil and gas is in challenging environments and challenging countries. And there is no easy country to do business. We've been investing in Israel from 2016, when we took over the responsibility of the Karish field. Our commitment to the government was that we would develop fast, bring security of supply and competition, which is what we've done. The last 2 years have been challenging, but they've been challenging more for the people on the ground, all people. And we have been operating without disruption because of the war. Of course, we navigated the challenges. We continue to produce at the maximum possible rates to bring gas for the people of the East Mediterranean. And at the end of the day, this is the job of oil and gas companies. We're not here to resolve geopolitical conflicts. We're here to do a job, which is to produce clean, affordable energy for the people of every country that we operate. So it has been challenging, but we navigated it. We have been producing, and we have been able to deliver the results to our shareholders who have supported us throughout this process. Well, we went through a phase where a lot of the financial institutions and the investors, because of ESG pressures, moved out of the oil and gas sector. And that was a sign that we, the independents much smaller balance sheets than the majors, would face difficulties. At Energean, we have never so far had any problems raising capital when we needed it. Last week, we raised a new capital markets issue, a bond in the capital markets of 400 million euro at a very favorable pricing, showing that investors are still here for the right stories, for the right management teams, for the right projects. And despite the challenges, despite the fact that we operate in a challenging geopolitical region, we did get again the support of capital markets. We've been able to raise capital for our project in Israel. $2 billion has been raised, $2.5 billion has been raised there. So we are continuously seeing the support of capital markets. But I repeat, for the right story, for the right credit risk, and for the right management team that is able to deliver results.